And Shubhamay Bhattacharjee, Senior Business Affairs Journalist, is joining us now. Mr. Bhattacharjee, it's the third consecutive repo rate cut. How does it align with the RBI's broader monetary policy strategy?
It does align, and it aligns rather well, because what the central bank governor, the Reserve Bank Governor, Mr. Sanjay Malhotra, said is that pushing growth is now the primary target of the Reserve Bank of India. Till now, we were looking at both controlling inflation as well as allowing growth to push up. Now, with inflation for the year targeted at 3.7%, it's fairly clear now that the RBI has enough space to push for growth to come up in this year. The target is at 6.5%, and you know, right, RBI's marksmanship has been extremely good. I've been noticing that over the several years. RBI's numbers usually come out trumps at the end. Right. So definitely RBI is clear that that whatever it does now will be to push growth when the inflation conditions are benign. Yes.
Mr. Bhattacharjee, also a large increase of money supply. It's going to impact inflation, isn't it? Do you think there's enough competition and supply to keep inflation in check?
That's an interesting point. So what happens is that this year, if we look at the global markets, we don't expect exports to really boom. The impact of the tariffs, the Trump tariffs, is creating a huge problem in the global market, and it's not within our control. It's also not within our control as to what happens in the geostrategic pressure points, the Russia-Ukraine war, the Israel-Gaza dispute, and there could be any others coming up. These all make it very difficult for Indian business to try to look at global markets as areas where they can expand their operations. So what happens? The government has, of course, been pushing investment for the past several years. In fact, that is coming out of COVID. That was a very strong movement by the government. Now, the government, obviously, and the RBI is looking at pushing consumption. And when you're trying to push consumption, especially at the lower end of the pyramid, cash, and I don't mean just cash as in currency notes, but right, cash even as UPI data points, both become very significant, essentially giving more purchasing power to the lower middle class people to be able to borrow more, to consume more. And okay, with rate of interest coming down, that is the strategy.
Mr. Bhattacharjee, you did mention a few of the external factors that could have an adverse impact. But could these also be challenges that could help India maintain a high growth trajectory? Because there's a lot of investment now that's likely to come in. And I mean, India is the fastest growing economy. Investment may be coming in from outside as well. So there are opportunities for India here.
That's right. I mean, our weakness still remains a private investment. That has not really picked up, and the finance minister herself has talked about this, the fact that private investment has been sluggish. Government investment has been very strong. So now the drivers of the economy have to be the government investment, which is already there, and private consumption. And to make that happen, obviously, as you're talking about investments that are coming from abroad into different sectors, would make a tremendous impact. So there are a large number of investments that are coming in. But to right, keep those investors interested, you have to ensure that the consumption basket, the pace of consumption, starts looking up impressively. Okay. And that is the key which the RBI governor, the Monetary Policy Committee, basically looked at in their deliberations this time.
We'll leave it there. Thank you very much, Mr. Shubhamay Bhattacharjee. Thank you for joining us and unpacking that for us.